Most clients, I look at twofold of clients. One that are my age in the 50s, and they're concerned, and I've got the younger ones that are coming through that haven't seen 11, 12 interest rate rises. And I adapted two strategies. With the older generation, I would say, we've been around, guys, when these interest rates, I can remember they were 9.75%. I remember 17% in 1984 when I started lending in a bank. And we adapted there. As I say to most of them, we got used to spending cash flow. We got used to spending extra cash. The average interest rate today at 6% for owner-occupieds or high fives is basically the average I would have said it's been over the last 36 years that I've been in the industry. So it's a matter, I say to the clients, we've got to get back to basics. Your home's your most priority. We've got to look at the way we can save money and be able to then make those commitments. Again, people are ringing me before their fixed rates coming off, and I'm saying, well, why don't we break this fall down a little bit further to coming off these fixed rates and say, we know it's coming off in December this year. Let's start paying a little bit more now and break that cycle so it's not a big fall, which they talk about, this cliff, but let's break it down to little molehills that we're going to fall down and we get used to our cash flow. The younger ones are a bit more challenging because they've never seen rate rises. And as my son, who's an electrician and 25 years of age, said to me, Dad, I keep getting the letters from the bank, the interest rates are going up and my repayments are going up. I just can't do it. I don't get a chance to be able to afford this. When I try to adjust my loan repayment and pay extra, it keeps going up. Again, I just say you've got to sit down with these clients, and this is where our opportunity is, and budget with them. Where are our excess spendings going? Where do we sit down? Where can we save money? Not going to the pub once a week or having a meal out. Can we stay at home? Can we have people over for barbecues? And that's a really good relationship you build with people, because you've got to take that concern and break down that concern, the way I see it, and give them little examples of how they can do it, little steps. So it doesn't become a worry. It doesn't come, I can't sleep at night. And as a mortgage broker, I think our biggest challenge with people is to being able them to put their head down on the pillow at night and get a good sleep and say, hey, I can afford this, I can do it. And that's what I've been doing with clients, just having that conversation, being able to work out where they can save money. And with the older folk, it's more, hey, can't go to the pub this week, sit down and you might have to make a bit more in repayments. Because we've all been there, a lot of them we forget. And as soon as things get difficult, the first thing I find with a lot of clients, they want to put their head in the sand and then it's too late. So I'm trying to have this conversation early with clients and say, let's address this decision you've got to make now, how you're going to save money. And I do it from the start and spend the time with them. I'm 57 years of age. My next person under me is Luke, who's 31, and it goes down to 19 years of age. Generally, what I've been quite successful is I've been taking these young students, either going to university or finishing school, chatting to them, and then looking where they're going to fit into my business model. They like finance because they're going to do finance. So some of them will be able to then come into our processing side where we have a process for each of our broker, or they might go into our retention side. So I break the business up into two models and then empower our staff also to look after them. And again, if they're a young person doing finance, some of them fit into that processing side. And I haven't put together an application in the last 15 years. Technology isn't my strong suit. Technology is their strong suit. So I'm empowering those staff that are coming through, and some of them are only 19, 20 years of age, and I'll sit down with them and they'll go, why don't we do it this way? Or why aren't we using this program? And over that, we've involved our processes to become a lot better. And the same with the recruitment side of things. Now, some of them are better we can talk to. They're really good natural speakers, and we start to teach them how to do annual reviews, start putting together presentations for our clients, approaching banks. And then what we've got them to do is to start emailing clients and getting in front of clients with, this is, we reviewed your home loan and this is what we can get for you, and getting them to understand that. And through the use of these younger people, and as Dan said, we're starting to develop my next generation of brokers, because I'll be able to see the retention staff that are working there, have they got the idea to become a broker? Or with the technology, the people who are looking after our processes, are they my next compliance person to help me get through this compliance network? So between the use of staff, I've been able to grow our business, because at that point, they've all got specialities, and that's what I'm trying to identify. I can't be one in everything, and I've learnt that the hard way over many years by trying to do it all myself. by employing staff and working out where they can fit into the environment and getting to build my culture. And the culture to me as a mortgage broker is the most important thing. When I'm competing against banks and on techno sites, etc., having people on side and building my niche or what I want to put out to the client is the most important thing. Because I'm competing, and I don't like against you all, but I want to provide a service to a client that they're going to go to a barbecue and tell 5 or 6 other people. And I'm doing this through the people I recruit, through the technology that I'm using, that they're instigating into my platform and saying, hey, we should be using this. And also that service that I'm providing to them. I want to provide a service that's second to none, that they're going to go, hey, I've got a review done by my mortgage broker, I didn't even contact them. And that's what we started with our fixed rates. We identified early in the year that a lot of these clients were going to come off their fixed rates and we're going to have a bit of a jump. I employed a young person who's only 21 years of age, worked in a hotel, but she had the customer service and taught her, gave her the skills to do it over a period of 2 months to be able to identify these clients. We've gone out and done a review on their variable rate and at the same time, introduce that story about it. So to me, by using staff, people, identifying what their skill set is, and of course they're going to make errors, and of course you've got to educate them. That's a timely process, and some of them will say it's not for me. I go, thanks for the time. But that to me has been the most important process that I've introduced or change in my business to try and get it from where it was, where I'm a one-man band, now to having 10 on staff. Trail income to me is the most important thing I have in my business because it's an ongoing income stream. If I don't do any more work, tomorrow I've got that income stream coming in. So to me, protecting that is the most important asset of my business, other than the people. So that's where I put a lot of emphasis on. I've got 4 staff that constantly review our clients' loan accounts every day of the week. My idea behind that is, again, understanding, as Therese was mentioning earlier, understand your income stream, where it's coming from. Ours is coming from our trail book, which is amazing. But what that does for me more than anything is they then talk to other people. And I think that's the most important thing, saying my broker did this, my broker done that. And again, the leads and referrals you get on for this, you can't repeat. And without having to have these people saying get Google involved so they locate your business and all these other IT and AI things that they call, which is all new technology to me. I think the old-fashioned, being in front of clients, retention of your clients, talking to your current clients is your best referral base. In the old days, we used to say all your clients, your future clients are sitting in your filing cabinet. We don't have filing cabinets anymore, but getting in front of clients, during your views with clients early. They might say, I haven't heard from you for 12 months. That's why we try and break it in. We try and get in before a bank will write to them on a fixed rate and talk to them, which is 2 months out. We'll start it at 3 months out. What we want to do is get the first person to start chatting to those clients. Our larger clients with bigger loans, they're the more ones we want to protect even further. We'll do a 6-month review on those because that is what we're trying to do, to sustain and keep that database. And those clients are generally mixed with people with bigger balances as well as the mums and dads. So that's what we try and do. And I think more emphasis I put on that part of my business than going out and advertising and trying to grow it. We always want to bring new referral partners on, etc. But it's a very tight market these days. Everyone's already done that. Back in the 2000s and 99s, tap on the door of an accountant, talk to a real estate agent, talk to a solicitor was everyone's go-to. But they've all been exhausted. So to me, the best thing is your clients are your best referrals. And putting as much emphasis on that, to me, is the most important part of how I'm growing my business.